Hello traders, Gary Wagner here, just about 11 o'clock in Honolulu, 5 o'clock in New York. It is Monday, 8th day of April, 2019, and this is the daily report for gold and silver. We had a nice upside move in the precious metals markets across the board today. Gold trading up about $6, currently at $1301.40, which puts it up about $5.80 on the day. Silver also had a nice showing. That gained about 13 cents at $15.22. Platinum gained on the day almost a full percentage point, $913.80. And palladium not far behind, about a 0.25% gain at $1,355.50. We did send out a special trade alert this morning, and we will cover that in detail as we pull up our technical studies. Speaking of that, let's take a look at our first chart. So traders, a nice close today, actually a gain of $6.40. We have June gold currently trading at $1,302. And the only caveat to today's gains is the fact that it is closing well off of the highs that were achieved in early morning trading in New York, when within the first hour, hour and a half of trading, we popped up almost to 1308, 1307.90. If you recall from Friday's show, I talked about the fact that we really needed to see an effective close above 1300 before we would trigger a buy signal. Well, we got exactly that. We got this particular level taken out today. The only reason for concern that I have, if any, is the fact that it did sell off so far from the actual high. And what that tells me is we have the 50-day moving average sitting at 1309.80. And then we have our next level above that in terms of resistance being the 0.23% retracement of two different levels. So we do have a harmonics here, both our long-term as well as our short-term retracements, both sitting between, call it 1313 and 1340 as some real resistance. Above that is this particular high, and I believe that this high comes in roughly at 1324.40. So we are looking to issue a buy signal in gold. It is above 1300, and that's exactly what I was hoping for. It has solidly contained itself above 1300. We haven't seen any real dips since the market broke above that, back below that, but we did sell off so much after reaching those highs this morning that I have a little bit of concern about it having the ability to sustain itself. However, when we look at the big picture, what we are seeing is the consolidation that we saw last week. We pointed out the fact that we had a whole series of very, very narrow opening ranges between the open and closing price throughout the entire trading week last week. The fact that we traded and closed above that, traders, that is significant, and that bodes well for the bulls. The question is, how far can we see this market really move up? Because we've got these resistance areas that pop up really within $10 to $15 of current pricing. So I will send out a special trade alert recommending the initiation of long positions in gold. Market is currently at 1302. It did close above 1300, and that was our trigger. We also had a good base that was formed. And in terms of a level to look for a protective stop, what we want to consider is these lows that came in last week down here, and then more importantly, this area of 1290.160, which is the 0.38% retracement level, and that seemed to be a supportive area in terms of open and closing prices, not necessarily the lows. Of course, it is the lows that we need to concern ourselves with when we go long this market. So traders, you can effectively initiate a long position in the June contract. I will send out a trade alert to that effect that will be coupled with our opening letter to let you know that it is time to enter the market. We might send out the trade alert a little bit early before we actually release the letter and video report today. But the fact of the matter is we did see a solid close above $1,300. And traders, lastly, I do want to take a look at the dollar index today. A dollar weakness definitely contributed about 3/4 of the move that we saw today in gold pricing moving higher, because when we consider that gold gained 0.49%, call it 0.5%, and the dollar dropped by 0.37%, call that 0.4%, you can see that the vast majority of gains in gold today were really based upon dollar weakness, but there was also buying that came in. And traders, speaking about buying, it was reported by Bloomberg, and we talked about this in our opening letter, that the People's Bank of China raised their reserves to 60.62 million ounces in March, and that is up from 60.26 million ounces in February. What that tells me is that the buying that they exhibited really for the last year will continue, and it's been reported that it is not only the central bank in China that is adding and accumulating gold reserves, but global central banks continue to add to their gold reserves, and that to me spells a very bullish market sentiment in the weeks and months ahead. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.